These are the best entries with this chart pattern with the professional traders. Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, we are teaching you the perfect way to master these entries from the equal lows in the trend continuation and a reversal areas. That sound amazing, guy? Subscribe on the channel, like the video, leave the comment below, and I will see you in a minute on today's video. Okay guys, welcome back. So starting by entering from this opportunity from this chart pattern, the chart pattern that we are talking about is a reversal chart pattern, is a bullish reversal chart pattern. That is a double bottoms. Remember, in our previous video, we explained in general the chart patterns and where are they signaling the direction of the market. So now let's talk about the double bottoms. By understanding the way of the price move, you will understand where to enter from the double bottoms and where can you set a stop loss in a reversal and even in the trend continuation. So what is the double bottoms? Double bottoms will appear or will be formed when the price is moving down. We are in the downtrend, as you can see. Okay, when we are in the downtrend, we end up rejecting from the low. Remember, from the areas of bullish reversals, where we are rejecting from by forming the first bottom and even forming the second bottom, which names as the double bottoms. This is a bullish reversal chart pattern. Okay, remember, when I'm talking about the change of the direction of the market or a reversal, you have to be careful with the rejections. You have to make sure that you are rejecting from the strong area. That is areas of reversal. We are rejecting from support areas where we are supposed to be starting an uptrend from. So you have to make sure that you start from the higher time frame, like daily time frame. Where are we reacting from before the current market? So remember, you have to make sure that where we are rejecting is where the first movement uptrend started from. So remember, the history repeats itself in the market. If we had this movement from the down and we get another one from this area, this is the strong signal that we are going to be reversing to the upside. The history repeats itself as we moved up before from this area is the same formation that we are expecting from this area also. So the area of reversals have to be stronger. So bullish areas of reversal, we are rejecting from the area which has been also rejected before multiple times by changing the direction to the upside. So this formation of the double bottom showing that the sellers try to push the market down, but we end up failing to push the market down. The sellers rejecting from this area where we started creating the double bottoms. So now we have two bottoms. We have also a neckline. Remember, you can call this one a high, which is a resistance. This neckline is where we are going to be looking for buying from break and retest. So we have two ways to enter from this chart pattern. You have to make sure that in general, the better way to enter from this chart pattern is to wait for the market making a low by trading from the demand area, breaking above from this area, make a retracement from this area, or make a low before we start making a higher high. So remember, what I'm trying to explain here, as long as the market breaking the previous high, you are making higher high. Okay, when you are making higher high, we are waiting for the higher low. Any higher low doesn't necessarily have to be making a retracement from the neckline. The higher low from the previous lows, is very important, where you can enter by risking less than you are supposed to be risking from break and retest. I'm going to talk about that in a minute. Okay, if you enter from this area, you're going to be entering from here. The stop loss has to be below the previous low. This is the way of entering from the what? From demand zone. Now, the way we are trying to enter from this area, we reduce the stop loss. The stop loss will be small. Okay. The second way to enter from this chart pattern is to wait for the market. Also explain this. Wait for the market break out and make a retracement from the previous high, which is a neckline and which is also a resistance. This retracement will be a higher low, which creates a support where we buy from. So this time, remember, when we are trading double bottoms or double tops, we have to set a stop loss. If we entered from higher low, retracement from the neckline, the stop loss has to be a half of the formation of a double bottom, which is a risk area. Where the market is not balanced, if we break down from this area to someone waiting from the demand zone, we'll be making money. When someone who waiting from there break out and retest, will be losing from this area. So you have to make sure that the market is balanced, where from the double bottom, you have to buy from the demand area. So entering from this area will be safe, and even the stop loss will be so small, and the target will be bigger compared to the one from the break and retest. So someone who trade breaks out just only will be waiting for the candlestick to break and close above the neckline, so that you can go ahead and enter from this area by anticipating the market to even move and target at least the distance, which will be the same as the formation of the double bottoms, which is not a good idea to trade this chart pattern with just breakout. You have to wait for the higher high to the higher low, so that you can enter from the higher low from stronger area, which is a demand area. Okay, so now we are talking about the change of the direction of the market, a bullish reversal. Okay, what about in the trend continuation? Remember, in our previous video, we talked about the different types of chart patterns: reversal, neutral, and even the continuation. Those reversal chart patterns are also used in the trend continuation. So now let's see, can we get a double bottom from the trend continuation? The answer is yes. Don't make any confusion from this. If you see it, you have to make sure that how can you enter from that opportunity. So we have the market that is moving up from this area. We are making higher highs and higher lows. Okay, now what I'm talking about from this area, from this trend, we are in the uptrend. So we have a high, we created a high to the higher low. This is a higher low to the higher high to the higher low by continue with the higher high. So from the higher low, in the higher low, we created the double bottoms from this area in the trend continuation. We are making a retracement from this area from the previous high, which is our resistance. So if we have two in general, this is a higher low, but we have two lows, which will be equal to equal lows. So this is a low and we have two lows. Okay, this is another low, which will be an equal lows, where we can get an opportunity of buying from that area, which is forming a double bottom in the trend continuation. So when you see that, how can you enter from there? So the scenario, the way we enter from this one is the same. Someone will be waiting to to enter from the breakout and make a retracement from this area. But as I've been talking about, we are in the trend continuation. Make sure that we are buying from the higher low, which this one will be a demand zone, okay, where we are going to be taking a buy from. So it's better to enter from that area so that you are going to be minimizing your stop loss. Okay, taking a buy from this area, the stop loss will be below the double bottoms, anticipating the market to continue in the upside. That is the way of entering in the double bottoms in the uptrend. Okay, so we have another way with the formation of a double bottom. So this was a neckline, we didn't talk about that. Okay, so from here we are creating higher highs, higher lows, and higher highs. So we have a retracement from this area, from the high where resistance turned into support. We are buying from this area, but this time we have a consolidation. That consolidation is a formation of a double bottoms in the trend continuation. We have equal lows and we even have the equal high. Sometimes to someone who understands about the chart patterns in the trend continuation, we can even get a formation of a rectangle. So this time this formation will be a double bottoms. Okay, where we're waiting to buy from is from this area, from this low, where is a demand area. So we are waiting for the market to make a retracement from this area. We are not going to be waiting from this area where is a neckline or even the previous high, which is a resistance. The breakout from this area will be a fake out, and for us this is an opportunity for the higher high to make the higher low so that we can enter from the higher low and our stop loss will be small. We will be taking a buy from this area. Most of the times it's better to use a buy limit by anticipating the market to continue in the uptrend. So as you make a higher high, any higher low you are making will be an opportunity for you to make money in the market from this chart pattern. Okay, now let's move straight on the chart and take some example on how can we use the double bottoms in the trend continuation and still making money with a very big profit. Okay, here we have the market that is consolidating from this area. So we have the double bottom formation. Let's see, we are rejecting from this area, from this demand area. So we created a double bottom from this area. So the double bottoms doesn't has to be like this only. The way is formed where you are going to be waiting for only the double bottom like this. Sometimes you will get double bottoms which are like this, which are not somehow equal, but still the formation is still the same. So this one will be a neckline. So we have a neckline from this area. This is a neckline. What are we waiting for? We are waiting for a retracement from this area to enter by the breakout and retracement. But now we need to see the market making a higher low, because this is a higher high because we broke above the previous high. Okay, so now what are we waiting for is to make a higher low from this area so that we can enter for the upside continuation. So this is an area we are waiting from. Okay, in general, this is an area we are waiting from. So now we are going to use a buy limit from this area, long position from this area. At least the stop loss will be below the previous low, and expecting the market to move in the upside target will be from this area. So now we are going to wait and see what happens. If we can get the confirmation, enter for buy, setting a buy limit. So let's see what happened. Moving up, still higher low, rejecting from the previous high, which is a neckline. Okay, now someone who enter buy, break and retest, we also get an opportunity with this candle, but also someone who entered with the buy limit from this area, from the demand area, this is a very big opportunity to make more in the market, and even the stop loss you can see is so small. Our entry has been activated, as you can see from this candlestick, so we are in the market now. Let's see if we can get to our target. Okay, moving up, consolidating, moving up, then we go to our target. So that is the way of entering from the double bottoms in the reversal areas. So let's take an example from the continuation areas on how can we take that opportunity to enter in the market with the formation of the double bottoms. Here we have the market that is in the uptrend. So we have the creation of the double bottoms where they, from this area, let's see, we made a higher low, we made a higher low, lower high, lower low, lower high, lower low, lower high, low, high to the higher high by breaking the previous high. This was an inverse head and shoulders to the higher low, okay, to the high, to the low, equal low. Then we formed our inverse head and shoulders. So from this area, that's why we are going to be looking for buying opportunity. So we rejected from this area, retracement from the neckline of the inverse head and shoulders. We created a double bottom from this area, you can see. So now this is a neckline from this area, and we have internal, this one. This is a neckline in general. So where are we buying from? Remember, we need the higher low from where we formed from the double bottom, okay, from this area. That's where I'm gonna be waiting from. Okay, I will use a buy limit from this area. Okay, the stop loss will be below the previous lows, these candles, by anticipating the market to continue in the upside. These are TPs. Okay, this is also, let's see, even this one, and we're expecting the market to continue in the upside. Let's see if we can activate our entry so that we can continue moving up. So let's see what happened. Moving down. Okay, let's see. So our order has been activated. Let's see if we can continue in the upside. Okay, we are bullish now. It was so aggressive from this area. So now as we are moving up, the stop loss is here. Let's see if we can get to our target. Moving up, continuation, then we are still moving up. Let's see what happened. So aggressive, but we are now go to our target. The TP1 was good, the TP2, and even we go to our target. So that is the way of trading double bottoms in the trend continuation. So you can see, to someone who understands the continuation chart pattern, you can say that this is a rectangle from this area, so that you can continue with the formation of an uptrend trend. So guy, remember, you have to backtest these strategies before you start using them on your real account. Remember that. Backtest so many times so that you can get a confidence from what you see every day. Okay, so guys, remember, give us a favor, subscribe on the channel, leave the comment below, and like the video. I will see you next time. Be safe and be a better trader. Ciao.